Fund Supermart, your online gateway to unit trusts.
Briefly explain the concept of short duration investing. What are the key features of the Allianz US Short Duration High Income Bond Fund?
Duration is a measurement of how sensitive a bond is to interest rate movement. So for a bond that has a long duration, it is more sensitive to a rising rate environment, meaning that it will suffer more compared to a short duration bond. And as for our Allianz US Short Duration High Income Fund, its strategy surrounds around generating an absolute return with capital preservation followed by a high income generation. So some of the key features in the fund includes focusing on the high quality, highly liquid, non-investment grade bonds with short maturity and a target duration of 1.5 to 2 years. So the outcome of it is nothing like any high yield fund, and instead it has superior risk-adjusted Sharpe ratio that is closer to a core bond or investment grade strategy. And being in short duration allows the fund to protect investors from a rising rate environment.
To what extent does the new administration under Trump potentially affect the performance of the fund? Are you doing anything to address potential policy changes coming from Washington?
So Trump is probably the most unconventional and the most unpredictable US president of all times. He has already withdrawn the US from the Trans-Pacific Partnership, and he's going to renegotiate North America Free Trade Agreement after with Canada and Mexico. And there's a risk of introducing border adjustment tax. And on the other hand, he's also going to do a large corporate tax reform and deregulate many of the industries. All these putting together is really pro-growth and favor US companies. And as for our US short duration high income fund, we do not hold any non-dollar bonds. So it's not subject to any currency movement. And all the issuers that we hold are US-centric, US-focused companies that could benefit from many of these Trump pro-growth policy. The investment team, of course, will continue to monitor many of these policy changes and continue to identify bonds that have the best risk-reward potential.
Please share more details about the strategy and investment process of the fund.
The strategy uses a conservative approach to manage high-yield bonds. The investment process started by looking at an industry assessment and identify industry that have an improvement in business outlook, and also industry that are non or less cyclical to the overall business cycle. And after identifying the industries that we like, we will narrow it down to a pool of candidates of companies. We will use our credit scoring model to assist us in identify bonds that have attractive risk-return profile. And in the end, we will have a portfolio that consists of about 60 to 80 issuers. And these, by and large, are high conviction names with companies that have the most compelling risk-return profile that fits the investment objective.
What is the biggest risk for investors in the fund?
Well, as mentioned, the fund tried to capture high current income and absolute return from the traditional high-yield strategy while minimizing interest rate risk, and the investment team have good control on the credit risk. So when we look at the outcome of the fund itself, it has very attractive risk-adjusted return, even compared to investment-grade bonds or many of the traditional core bond strategy. So short-duration high-income fund is an excellent defensive building block for investors' fixed income allocation.